Hey everyone, it's Mike Burge from the Nuga team at Keller Williams. And in this video, we are going to talk about home prices. Is the value of your house going up? Is the value of your house going down? Where are we going in this crazy market? So stay tuned, find out all the statistics and information, and find out where the value of your house is going. Hey everyone, it's Mike Burge from the Nuga team here at Keller Williams, and I am here today on July 18th, 2022 for your Monday market report. So we've got a lot to talk about. Different things have happened with the market, and I just want to get over to that as fast as I can. But before we do, if you are listening to this on our podcast, then make sure that you go and check out ChattanoogaRealEstateInfo.com/Monday, and you can get all of our Monday market reports. We're going to go through some slides and things. So if you want to see all the slides and all of the numbers and presentations, you can find that there, ChattanoogaRealEstateInfo.com/Monday. And you can always get our Monday reports right there at that URL. So also, if you're watching on YouTube, you feel free to flip over there. You can find our podcast, and our podcasts are also available across all of the great platforms like Apple, iTunes, Spotify, Stitcher, Google Podcasts, whatever you can think of. We're probably there, Chattanooga Real Estate Report. Okay, so now let's get over to what's happening with the market. And today I'm going to talk about pricing and where the house prices are, where we think the house prices are going. I am going to refer back to a couple of things that we talked about last week with inventory, and you'll see some new slides, some updated slides on inventory as well. But I want to get you updated with what's going on in pricing. Everybody's worried that the house prices are going to go down. Nobody really wants to buy a house now and then have it not be worth as much in a year or whatever. So let's talk about where the housing market is going. There's a lot of things going into the calculations of what's going to happen. And I want to dive pretty deep into what's going on with how this is happening and why everything is happening with the pricing. So as you all are, I am sure, very aware, inflation is rising, and with that, the feds try to counteract it by raising the Fed fund rate, and that in turn causes the interest rates to go up. The biggest opponent of low interest rates is inflation. So when we get inflation, then it helps the interest rates go up, and that's not necessarily what we want, but it is what happens. So let's dig right into this. I'm going to share my screen with you as always. So let me bring up my slides. And here we go. So this is what is going on with interest rates, prices, and everything like that. So going back to talking about last week, the active listings have been increasing, and you'll see that we added June on here now. So you can see that the number of active listings, that's how many listings are currently on the market. Over the United States, our low in February was 376,000 listings on the market. And now the inventory has gone up. We're up to 619,000 homes on the market. So we have seen this increase in inventory. And I'll show you that's a good thing for those of you, especially that are out looking to buy a house, because now you have some houses to choose from, and it's not as bad of a bidding war. And we talked about that last week. Go check out last week's market report, and you can see all of that. So the new monthly listing counts. So this is how many new listings are being taken this month and last month, or whatever month we're looking at. And you'll notice that April, May, and June were actually up from last year. We're taking more listings than we did last year. Not a lot, but a little bit. So that isn't what caused the inventory raise. And again, we talked about that a little bit last week. But I want to be sure to lay this groundwork so that we can get into what we're talking about further. Now, the home price forecast for 2022, and these are from the big boys, all of the people that really do this for a living, the forecasting, Fannie Mae, Freddie Mac, CoreLogic, HPES, and NAR, all are predicting still the rise of the value of homes. The orange bar there is the average of all of those price rises in values of homes. So they're still predicting about an 8.5% raise in value. So how is that happening? The one thing I want to point out is, yes, we are seeing houses go on the market and doing price reductions. And I guess my question to you is it possible for us to have housing price reductions, but still gain value in your home? And the answer is absolutely yes. There are people that are still out trying to ride the huge wave of low inventory and marking houses up above what they're actually worth, and sometimes getting it. But what we're seeing now in the market is that people are having to list it right at value, and then they're getting the offers on it. But if you're overpriced a little bit now in this market, it's not happening. You're not getting all the offers or everything that you had hoped to get, those multiple bids over asking price. It's not happening. So I just wanted you to be aware that sometimes houses do price reductions, but the values of the houses are still going up, and that's a good thing. So Dave Ramsey, who I love Dave Ramsey. If you haven't checked out Dave Ramsey's podcast, he does personal finance. The guy is straight to the point. Love him. And he kind of put the market in a great perspective. So I'm going to read you his quote. The root issue of what drives house prices almost always is supply and demand. Now, interest rates affect that. When interest rates go up, guess what? Fewer buyers. The demand goes down, thus the prices are going to soften or not be as cray-cray, as Dave would say, as they have been. And that's what we're seeing right now. And this sums up our market perfectly. So it's not as crazy as it was, but we still have more demand than we have supply of homes. And that is why the prices of houses are going to continue to rise. There are not enough houses out there for people that want them. But the interest rates going up has affected that. It's caused less people to be in the market for homes because the affordability is a little tougher right now. So it's not crazy out of control with the low interest rates and the low inventory and the big whammy that we've gotten over the last year. Now it's just a little more moderate. So let's continue to look. And I want to take some slides here, and I'm going to back up what Dave is actually saying. So this is the single family housing units that were completed. Okay, so these are builders putting up new houses. And you can see that up until 2008, builders were putting up houses like mad. And in 2008, when we had the bit of the housing crash, and I say a bit of, okay, we had a big housing crash, the builders really struggled. They were speculating that the houses were going to continue to grow. They lost inventory. They lost speculation on lots that they had taken down, whatever it is. And the builders basically stopped building. So we had less homes being put up, but always still the demand of home buying. And we're going to talk about that in a minute. So if you notice the U.S. population by generation, the millennials are just slightly bigger of a population, slightly smaller of a population than the baby boomers were. So it is a large influx of people. And if you look right here, the peak home buying years, first-time home buying years, and people coming into the market and needing houses is right in this box and in this area between the ages of 20 and 34. That's when people are coming into the market and actually buying homes. And there are a ton of those people right now. So we're looking for more houses, and we're always needing more housing and more housing. I've got a couple statistics for you. 81% of all first-time home buyers over the last year were millennials, and they fell into that age of 25 to 39. 81% of all first-time home buyers fell right into there. 43% of all buyers fell into that price range. So we have a large group of people needing homes. But as we saw on the last slide, we're still not putting up the amount of homes. So let me quickly see if I can run right back to that last slide. The average, right where we are in 2021, that gray bar on the far end, that is about the average of homes that are being put up over the years. So you can see that all of the gray bars since 2008 all the way up until now are under the average amount of homes that we've been putting up and producing new homes. So all of those years from 2008 all the way till now, we have not reached the average of the last 50 years of homes being put up. So because that number is low and we haven't been producing it, now let me flip forward on this. The large group of people come in as first-time home buyers, and we don't have the houses for them. So therefore, the supply is lower than the demand, which is causing our home rates to continue to go up. Okay, whether the interest rates happen or not, there is still a supply and demand issue. Okay, so now I think I've driven that home pretty well. For buyers of median price homes, the 1-2 punch of record high prices and rising interest rates have pushed the monthly mortgage payment to about 64% more than last year, tacking on over $800 to the cost of financing. Now, something interesting, as the interest rates have continued to go up over the last few months, they've been going up. I mean, quite a few months. They've been going up since, and we've almost gotten up to, let's call it 6%. We've been close to about 6%. And what we've noticed over the last couple of weeks is we've gotten a little bit of relief from that. It's down to about 5.3%, right in that range nationally. So we've gotten a little bit of relief. The new numbers did come out this week about inflation. So the Fed will now meet about what those numbers say, and we're going to see what they're going to do and what they're going to implement from there. But right now at the 6% range, it's tacking on over $800 to the cost of financing, which is pushing some people out of the market. So people that have decided that, hey, maybe now is not the right time, or they just can't buy the house that they thought they could because the payments have gone up. So it started to push some of those people out, and that is what is keeping our inventory going up, is that bit of interest rates that are helping there. So this is what it all boils down to: the estimated home price performance. So as you can see, 2022, 9.3%. We just talked about that in one of the slides previously. HPES says 9.3% is what it said on that slide. The average of all of them was about 8.5% for 2022. But then we're going to go down to about 4.19% in 2023, 3.12%, 3.46%, and then 4% in 2026. These are the estimated growth in your home value. Now, this takes us out of that, as Dave Ramsey would say, the cray-cray period, and gets us back into a normal growth period. So over the last 50 years, the average rate of a home growth has been about 4%. So over the last 50 years, that has been the average. So we're back down to average home growth, which is good. We're still growing in value. So to put this in dollars and cents perspective, this next slide, if you were to buy a $390,000 home in January of 2022, over the next 5 years, you would gain $102,787 of value. Okay. I'm not sure where else you could put your money where you can gain $102,000 on a $390,000 purchase in 5 years. That's a huge return on your investment, and you have somewhere to live. So the growth is there. Even if you're buying now in this market, you are going to continue to get a return on your investment. And these growth numbers are based on the projected numbers that we saw on the previous slide. So hopefully that'll give you all the information you need about what's going on in the real estate market. We are always available for you to answer any questions that you might have about what's going on with the real estate market. What's going on with the value of my home? Should I buy a house now? Should I sell my house now? We would love to have that conversation with you and be your real estate consultant to help you through any of the processes that you might have needing to understand the financing or whatever you might need in the real estate market. So feel free to reach out to us. You can reach us 844-NUGA-HOME. Also, ChattanoogaRealEstateInfo.com has tons of information. Now we have the IDX search on there, so you can search for houses on ChattanoogaRealEstateInfo.com. And again, www.ChattanoogaRealEstateInfo.com/Monday will get you directly to the Monday market reports. Follow along with us every week. Find out what's going on with the real estate market, both nationally and here in Chattanooga. If you haven't checked out our podcast, we are available everywhere, the Chattanooga Real Estate Report, and also our YouTube channel. You can get there directly by going to NugaTeamChannel.com, and that'll just forward you directly to our YouTube channel so you can see all of the great information that we have to produce. Thank you again for everything. And remember, with the Nuga team at Keller Williams, your home is sold guaranteed or we'll buy it. Just call us 844-NUGA-HOME and start packing.